CNBC. First in business worldwide.
Good morning, everyone, and happy Monday. Welcome to our brand new show. It's called The Rundown. I'm Deirdre Wong-Morris.
Happy to be here bright and early, folks, and I'm Adam Bucktier. First up this morning, the top 5 things you need to know right now. Stocks slip. U.S. markets reverse record highs ahead of the jobs report.
Europe's turn. The euro dips on ECB talk of printing money.
Big utility bill. Russia hikes gas prices for Ukraine again.
Relief rally. Anadarko soars on smaller cleanup settlement than feared.
E-commerce edge. Jack Ma takes control of a Chinese financial software firm.
Live from the Singapore Exchange, you're watching The Rundown on CNBC.
Every day, we're going to be taking a look at some of the interesting or popular stories on social media that relate to our top stories. Today, we kick it off with something a little ironic, Adam, and this is the absence of social media.
Right.
I want to talk about Zhou Yongkang. We just told you this story, but he's at the center of what could be China's biggest corruption probe in 6 decades. So,
incredible.
If you try and search his name on Weibo, that's the Chinese version of Twitter, you get this message. It's been run through Google Translate, and it says, according to relevant laws, regulations, and policies, Zhou Yongkang's search results are not displayed.
From Mother Jones, of the other countries that are banning social media, including...
And now Peng Liyuan is getting attention for which smartphone she uses. She actually uses
What does she use?
a ZTE.
Wow.
She is supporting the homegrown tech giants like ZTE, that's a big Chinese smartphone maker. It's making a lot of inroads into emerging markets. I saw this and I got right onto my Google Maps on my iPhone, and I started chasing Pokemon. I don't know, it took me to Tokyo. Get in touch with us on Twitter. I'm at DCNBC. Adam is at AdamCNBC. We'll both be tweeting throughout the show and, of course, sharing yours as well. We've already got some good ones, Adam. Momentum stocks have been hit while the Dow trades sideways. Good point there.
Yeah, that's right. We've seen huge falls in that sector. And another one from prior MOV. I believe so. It has been a long time since the last correction. I think around about 10% of correction is coming our way. Ouch, it sounds painful.
It says absolutely, in my mind, what they do is criminal.
Don't get caught up in the world rig. What HFTs do is wrong and provide no benefits. They don't provide liquidity when the market is volatile.
One of the rules that has always seemed to apply is that nothing's closed until everything is closed, and you have to get to near the end for things to start to
A lot
close.
happens at the last minute.
A lot happens at the end in any negotiation.
Robert Reich, former U.S. Secretary of Labor under the Clinton administration, joins us from Berkeley, California. He is also the author of Aftershock, The Next Economy and America's Future. You can see the cover right there on your screen. Robert, many thanks for being with us today.
If it flies, it's there. Let's get right to Sri Jagaraj, still on the tarmac for us. What's happening today, Sri?
I just want to bring you up to speed with how executives are perceiving the current economic conditions, because we heard from Airbus yesterday, and their executives, unalloyed confidence from them, really, is no other words to describe it. And they trotted out some very compelling metrics. The C-17 continues to perform well in India and Australia, and he sees continued strong demand for heavy lift capacity. This is what he had to say.
Australia and India both own the C-17, and they're very happy with the results. They're, again, just a tremendous airplane with tremendous capabilities. It was used heavily in Operation Damian, the aftermath of Typhoon Haiyan. We had 4 C-17s down there. In excess of 8,000 displaced persons were moved out of harm's way in the back of C-17s, and as many as 20,000 plus humanitarian supplies were brought in by C-17s.
September, October or December, It's coming, and the markets aren't just sitting idly by. After years of operating in a low interest rate environment, Fed tapering could spell a real shift for major banks. When rates are on the rise, banks can start charging more for the money they lend out. And that's a big plus for net interest margins, which have been very tight with record low rates. But those higher rates could also discourage more borrowing and leave highly leveraged businesses vulnerable to liquidity issues, which could negatively impact the credit profile of the banks. And don't forget the giant securities portfolios that many banks hold in the form of mortgage-backed securities, US Treasuries, and any other sovereign debt that moves in sync with US fixed income markets. Any sudden outflows could mean markdowns to banks' profits and affect their capital ratios. Of course, geography could make a difference on how banks will be impacted.
Here in Asia, where economies are relatively strong, the first year of a rising rate environment could actually be a sweet spot for earnings, especially for banks with huge pools of deposits like DBS in Singapore.
And Hong Kong banks could be in the same boat.
Because the Hong Kong banks the interest rate regime here is tied to the U.S. rates because of the currency peg, I think the Hong Kong banks stand to gain the most.
Mainland lenders are more isolated from the world as Beijing maintains a tight grip on benchmark interest rates. And in Japan, banks might benefit from expanded loan growth through Abenomics, but net interest margins may not get much uplift as the BOJ just got started on its massive QE program to keep rates low. And Europe, like Japan, is just starting to recover. With risks receding from their debt crisis, financials aren't expecting a sudden rate surge anytime soon.
Frankly, I don't think interest rates will raise that quick. I think there's a lot of testing of the market to see the sensitivity, but I think we are going to look at a low interest rate environment for another while.
Which brings us to the emerging markets whose economies stand to lose the most from the drawdown of US easy money. As investors pull money from riskier markets, banks may not be immune to the economic pain.
If we look at the banks themselves, if India, we are a lot more negative in terms of the prospects there, and the reason is because they were already halfway through a downturn, and now there's going to be another step down.
So whenever the tapering comes, it'll be the lenders that operate in the stronger economies, have diversified revenue streams, and customers that can afford to pay up that will stand out. It may not be flashy, but at least it's something they can bank on. For CNBC, I'm Adam Bakhtiar.